colleagues, Mitesh, Gerard, can you share with the audience your views thereon?
Len, if I can, I think the other big advantage of a pre-meeting is you avoid becoming too operational as a committee. Remember, audit committees and board oversight committees is purely about accountability, accounting for what you're responsible for. And you want to avoid at all costs going into the detail of operations within an organization. And a pre-meeting gives you that advantage. It actually makes sure you don't get too operational and you deal with the issues from an accountability perspective.
The other matter that you need to recognize, and I'll talk to my colleagues, you know, one of the aspects that we talk about in the King report is that you shouldn't have a particular member of the board as being overly domineering. So you could have a situation where you could have an audit committee member that wants to speak on every item on the agenda. So by you having a pre-meeting, you mitigate the verbal diarrhea that might pervade the audit committee.
Chair, can I just add on? I think from our perspective as external auditors, the reason we like the pre-meeting is it gives us enough time to go through important issues with the chair and with the audit committee members outside of the audit committee, because normally during an audit committee, there tends to be a limited amount of time and you need to rush through the issues, and if there's any debate, you don't really come to conclusion apart from the meeting getting agreed. So it also gives an understanding to the audit committee, the detailed understanding of our issues as external audit.
The other element before Gerard responds is that you don't want to embarrass these individuals in an open forum. So by you having the pre-meeting and the document is defective, they can fix it before the meeting so that they're human. They've got feelings. So if you have the pre-meeting, you can share with them your particular concerns so that they wouldn't take it badly in an open forum where their competence is compromised.
I think a difference of opinion between internal audit and management at an audit committee in front of the non-executive directors is fatal regarding the credibility of both the internal audit function and management. It indicates that either internal audit didn't do their job correctly regarding the clearing of matters in audit reports before the audit report was tabled for the audit committee's consumption, or management has held back and wishes to take a stab at internal audit in front of a high-powered audience, e.g. they don't really buy into the internal audit process. So definitely having a meeting at least 2 weeks prior to the audit committee, definitely before the packs have to be put together and documents tabled, is very important to make sure that there is no surprises for either side at the audit committee. You don't want to be blindsided as an internal audit function and vice versa regarding management.
Good, thank you for that, thank you. Further questions, ladies and gentlemen? Go ahead, Professor. Mr. T.D.A. Ross, ex-partner of Deloitte & Touche. Go ahead, sir. Chairman of the Audit Committee of Liberty Life.
Dr. Cohen, I think you've done extremely well. You haven't lost your pizzazz and the way you control meetings. I wish I could do the same.
For a modest fee, I'm happy to help you.
Just one thing you didn't cover. You didn't cover the re-election of the auditors. And just wanted to know what process you would go.
The re-election, I'd ask our company secretary to respond to the issue.
Chair, yes, I think, you know, normally that forms part of when we approve the annual general meeting notice. And so, you know, depending on, unfortunately, I don't know what the previous agenda looked like and what the next agenda looked like, or the work plan, but somewhere either here or at the next meeting when we sign off on the annual general meeting notice, that issue would also be on the table for the audit committee.
With the circular, with the glossy financial statements, we will pick that up. Thank you. Dr. Cleopas, did you have a question, sir?
Yes, Chair. I just wanted to appreciate, I think, the program that organizers, that I think is a valuable experience for such type of presentation. I just wanted to also make one comment to say that I think in this environment of government, the issue of signing declaration of interest is imperative, because as you are aware that most audit committees in the public sector are chaired by a board member, not an independent audit committee. So it becomes necessary for the register for conflict of interest to be signed.
We accept that. We appreciate that. Thank you, sir.
Then there's a question there at the back.
But again, Doctor, if I can just respond, I mean, again, it goes back to the original appointment of audit committee members. The point is that when you're appointing at that point in time, you should actually get them to acknowledge that at any particular point in time they will declare interests on the agendas of any of their audit committees.
Good.
Dr. Kono, what I found very interesting was that the auditor declared his independence, and rightly so, but it's the job of the audit committee to check out that independence. Where would that fit into what work would you do to check the independence of the auditor? And also in the context of non-audit services, where would that fit into your role?
Thank you, Dr. Ferrer. We shared by the report back by Mr. Patel that we have a policy at Transformation Limited that non-audit services would not exceed 25% of the attest fee. So as far as the independence of the external auditor is concerned, the competence of the external auditor is going to be done at the next meeting when we approve the glossy financial statements and we prepare the circular that will go out to the shareholders. So from an independence point of view, from a term, IFAC, Companies Act, we will address that together with the ISAs.
And also on checking their independence, it's important that they disclose the process that they have followed. Most of the audit firms, they make their auditors sign on the independent. That does give us comfort as audit committee members as well.
Thank you. You've got to speak up, turn on the volume.
My name is Tandiwe Fongoka from Government Employees Pension Fund. I head the Internal Audit Division. I have just two questions. The first one is on the role of audit committee to evaluate the effectiveness of internal audit. I did not see it covered. And the second one is the role of internal audit where risk management is concerned. I saw that the internal audit had reported on risk management issues as well as the risk, I think the chairperson of the risk committee. I just wanted to see where is the overlap there and how does it affect the independence of the internal audit.
Thank you. Those are very valid questions that you raised. The first issue on the effectiveness of the audit committee, if you review the internal audit charter that we have circulated, you'll find it posted on the website. You will find that the hiring, the promotion, the effectiveness, and the dismissal of the chief audit executive is a responsibility of the audit committee. We also have the reporting from a functional reporting point of view from the chief audit executive to the audit committee, in particular the chairperson. So if there are any concerns as far as the effectiveness of the internal auditor or the internal audit function, that would be addressed at the audit committee meeting as such. And we have provided on the agenda that you have seen on the screen for the in-committee meetings. So when we convene the in-committee meeting where we have discussions with the external auditor, the internal auditor, we address the issue of the independence and the competence of internal audit. So we've addressed that. The second issue that you raise is risk management. We promote, and what we have done in King 3 is we have a separate chapter on risk governance. So we want internal audit to assess the effectiveness of risk. So they are assurance providers, and in terms of the definition of the IIA, internal audit follows a risk-based plan. So we keep those particular functions separate, but they sit together in that combined assurance framework that we address. Can I ask Gerard and Vishnu to embellish that?
Yes, definitely. Because of the fact that the audit plan has to be risk-based, internal audit can't stand totally isolated from the risk assessment process. because in the end, internal audit will be held accountable for the work they did or didn't do. So we do question from the beginning of the risk assessment process whether that process is complete, whether we as the internal audit function can stand behind the completeness of the risk profile and basically the appropriateness of the risk profile as created, because you could frequently find a risk profile to be very strategic, with it having very little to do with operations of the organization, or alternatively it's very operational and doesn't really touch upon the core strategic objectives of the organization. So internal audit is independent of the risk setting process, but involved and has to be involved.